very pleased to be hosting today the fourth session of the ChangeNOW Live Talks. Today we're going to be covering a topic that is very interesting to me, investment in the impact ecosystem, and more particularly in the context of the COVID-19 crisis. We will be trying to understand are investors, how are they responding to the crisis? Are they still investing? Are they waiting for better days? Is their activity actually blooming? That's some of the questions we'll be trying to cover today. Taking a little bit more hindsight and distance to operational discussions, we'll also try to understand what this context means in terms for the ecosystem in terms of opportunity and risk. What are the opportunities for the impact ecosystem going out of this crisis? What are the risks as well that may be inherent as well to a post-COVID-19 crisis for the sustainability-driven economy? I'll also be very interesting to understand their view on an underlying question, and that's the reason why I decided to call this session Impact Investing from Unicorns to Camels, trying to understand, are there some fundamentals that are shifting in the way we're actually assessing the performance of a company? Meaning that going from a methodology around startups that is advocating growth at any cost towards a common understanding that maybe tomorrow the main indicator of performance will be for companies, their ability to go through difficult periods, uncertain times, crisis, their ability to adapt and be resilient. So that's what Alex Lazarov called the concept of camel companies. So we'll try to cover these questions. We'll be today inviting four great speakers at this session: Aglaé, Machtelt, Pieter, and Alexander. And we'll start with a discussion with Alexander Piutti, who is a German entrepreneur with a very interesting background and journey towards social entrepreneurship. Please do not forget to ask questions on the comment section of the page. Be sure to be asking those questions to our panelists. And finally, for those of you who are not familiar with the concept of impact investing, please look at the link that we've put on the concept of impact investing. It's an amazing video that was put on the Social Impact Ventures website that explains the concept very well. It's a 4 minutes long video. I would really advise you to have a look at it after today's sessions. All right, so let's start. And I'm very pleased to welcome in this talk, Alexander Piutti, who will be sharing about his journey towards social entrepreneurship. Alexander, are you here?
Yes. Can you hear me okay?
Yeah, we can hear you. So you're in Berlin right now, right? How's it going?
Well, it's certainly interesting to keep up and to combine, personal life and business life and the startup mission and so on. But that's a mutual challenge that we're all facing. Because I'm much involved in food, food is critical to everyone, basically. It's like our business pulls forward, even stronger, even faster during Corona. So we're lucky in that sense. And also it's an interesting time. Yeah, and so let me introduce myself real quick. I was born and raised in Germany, but part of my upbringing was international. So I spent a couple of years in Asia. For example, I finished my high school education in Hong Kong, moved back to Germany. So this in and out of Germany and international is almost like a common theme in my life. I studied engineering in Düsseldorf in Germany. So I'm a tech guy by heart, but then moved to the US, worked as an engineer for GE, and continued to live in the US and got my MBA from Wharton, the Wharton School of Business. And what's funny is at the time, and this is a couple of years ago, I focused on entrepreneurship. So at the time when you did your MBA back in the 90s, most people focused on consulting, investment banking, strategic management, financial reengineering, and so on. And I was like, I want to be self-employed. I thought it was kind of cool to run your own business. I had no idea. So I focused on entrepreneurship and I became an entrepreneur. And after my MBA, I moved into consulting. I worked for Booz Allen for a couple of years. And in 1999, I jumped off and co-founded my first company. And since then, I founded approximately 10 companies. I was lucky, I could exit a few. I was mostly in tech, given my tech background. So I was in tech, advertising technology. I've seen it all. I'd say, like success and failure and major success. And one of the more interesting, pieces of my business life was like the invention of performance marketing. So I was pulled into like a young company right after consulting from a Wharton colleague of mine, and that was the birth of performance marketing. So how you monetize search, basically. So we started with our company in parallel to Google. It sounds silly today, but what's interesting is Google did not invent the business model how to monetize search. Yeah. So if you guys recall, I mean, obviously Google has done a tremendous job on like putting out all these amazing products, but they put out search as a product, but they had no idea how to monetize search. Yeah. So they started without a business model. And our company at the time was called GoTo.com, which later turned into Overture, invented the mechanism how to like put text relevant advertising next to text or keywords. Yeah. So that was the business model that later Google accepted as the core model, and Google scaled. So I was part of that company, and I was a young kid. I was just out of consulting, basically. Had no idea. It was a true invention. Like we didn't copy anybody. Like we were the innovators. And my job was to start that company in Germany in the end of 2000. Yeah. And if you guys recall, it was like a really tough period. However, it took us some time, and eventually the concept worked, and we sold the company for 1.6 billion. Between Microsoft and Yahoo. Yahoo actually got the business later on. I ran search products for all of Europe out of London a couple of years later. So this is my background, like all about tech and marketplaces, digital marketplaces, data deals, putting products out to the market, running teams and so on. So I'm a passionate serial entrepreneur. I've seen it, I've seen both in either side, like corporate and startup. And this brings us to the topic to say, like, when it comes to business models, even with Corona or beyond Corona, my conditioning as a tech entrepreneur was always to think in B2B2C models, not just B2C, but B2B2C. Yeah. So eventually you would reach out to the consumer, but to add some complexity to the model, not because of like complexity, but to have like a more solid foundation of a business model. I always try to like pull in business partners to scale my business. Yeah. So for example, when I built Game Genetics as the first game distribution company internationally, I talked to Dell and Lenovo and said, like, wouldn't it be a cool idea to have all these games on your laptops when they leave the factory? Yeah. And they said, yeah, that's a pretty cool idea because we don't understand games. And I said, okay, I can put these games in an ongoing fashion on your product, and you don't have to worry, and like you track more consumers. And this might be a point of differentiation. Yeah. So like B2B2C. So I talked to Dell and Lenovo, and it took me, 18 months or 24 months to strike these partnerships. But as a result, like every single laptop moved out of the factory with our games on that laptop, basically. And we caught millions of users at no cost, if you like. Yeah.
So what you're saying is that it's good to basically not be focused on one particular service or product, but what you're saying is that you're an advocate of adding complexity to business models so that to make sure that the company is a little bit more resilient and spread the risk. That's what you're saying?
Yeah, well, yes and no. So like, as an entrepreneur, I always like to take shortcuts and find the fastest way to the result. So I'm not in favor of complexity, but what I'm saying is like sometimes complexity is a result if you construct business models in a more creative way than just to consumer, for example. Yeah, so I'll give you an example. If you think about the truly successful companies today, like Amazon and Facebook and Google, they all work in triangles. Yeah, if you look at these companies from a business model point of view, it's not a direct connection just to the consumer. Yeah, like say Spotify. Yeah, Spotify. I'm a customer of Spotify. I love the service. I'm paying like $10 every month. But if another company came around to say like, I can offer the same amazing service to you guys for free, yeah, because I have another source of revenue, i.e. I construct a business model which is not depending on the consumer payment, yeah, then Spotify might go out of business because they're jeopardized. Yeah, that's what I'm saying. So, and if you look at Amazon and Facebook and Google and my companies, the way I set them up is like always try to like construct these triangles to say there's a clear connection to a target audience, but if I can put in another party who actually pays part of the bill, and I can address that other party also in a successful way, with, you know, let's say empathy to understand their agenda, yeah, then I have a more solid foundation to build my business, potentially at a slower pace, yeah, but in a much more scalable fashion. Look at Amazon, for example. Yeah, that's my point.
And so you started introducing your past experience, but I'm very curious to understand what made you move from tech to social entrepreneurship? Today, you're an expert in circular economy, in food waste. What was the trigger?
I mean, that's a very personal story, and which I'm happy to share. 5 years ago, when I was like super active building game genetics, we had like more than 10 million in yearly revenues, like things went well. I was misdiagnosed with cancer. So today I can talk about it. Don't worry, I'm personally fit. It was a misdiagnosis. But it came as a surprise. Something had made me sick, yeah. And so I slowly pulled out of my game genetics business, hired senior management, taught them everything I knew for 10 months, and pulled out. And that was the turning point in my personal life to say, like, what can I as a serial entrepreneur contribute to something more meaningful? It sounds stupid, but you know, that was my motivation to say, like, well, you know, gaming is nice, but things come and go. But you know, can I contribute to something bigger than just like you know, a company? Yeah. And so our daughter was born, Isabella, and she was healthy, and so this is my new life, if you like. And it didn't take me long to say, what's next for me? Yeah. So what can I do? So basically, I continue what I do. What I love to do is to build companies. But that inner voice in me told me there needs to be something broader than just like another startup. Yeah. And so I got intrigued by education, food waste, care. And I started researching these verticals, if you like. Yeah. And I got stuck with the food issue because it was so different from my edtech experience before. I was a software kind of guy, you know, I thought digital only. And so food is exactly the opposite. And that's probably the answer why I'm intrigued to food. And then very quickly I saw there's this massive food waste problem. And people talk about it as, you know, a global problem. But in, you know, why is there the absence of any professional mechanism or company, call it, to eliminate this problem? Yeah, so I got intrigued by this problem. It was like, where's the secondary market for surplus food? Yeah, maybe there is one, but I was not an insider. I didn't see it. So I started talking to insiders, and they told me, well, yes, I mean, it's a great observation. There is no secondary market for food which becomes like surplus food. Yeah. In any other industry, there's a secondary market, like plan B. Yeah. So even on the consumer side, like eBay, you know, these are all secondary markets. You know, if plan A fails, you still have another channel base and say, like, okay, like, you know, that's going to work. So like in food, that does not exist. Yeah. And being a marketplace kind of guy, I was like, wow, that's a massive opportunity, right? And so I tried to find out, is there a showstopper why that does not exist? And I started talking to insiders and food producers and, you know, the food banks and government and the Senate and everyone, and tried to challenge them. And so then I started a company called Surplus, which is all about a food waste solution, but it's low tech to no tech. It's more like a retail solution. And we had no idea if this kind of company would work, yeah, because I came from a very different world. And the answer is yes. Yeah, so I can encourage all of us and all of you to say, you know, allow yourself to apply your skills to something slightly different. Yeah, so like, you know, to move out of your home turf. And, you know, what are the core competencies? You know, I can handle tech, you know, tech is my home turf, but, you know, I can apply things to different problems when working with the insiders. Yeah, so I cannot replicate the insiders. I still need the insider. I try to move as fast as I can to these answers and you know, construct insiders as a team or alliance. Yeah, but yes, we can all transfer our capabilities, like something that we don't know, but we can team up and crack problems. And that's my motivation today when it comes to impact entrepreneurship. And we just talked about it. So impact entrepreneurship, at least in Germany, that's a kind of, you know, like bizarre term for most people in the old industry. They say, hold on, that's confusing. You're talking about for-profit ventures that, solve global problems. Is that not a contradiction? Yeah. And we say, no, it's the new life, basically. It's the new business model. Say there needs to be a business model. Otherwise, you cannot scale. You cannot pay your employees. You cannot invest. Yeah. So there needs to be a business model. There needs to be technology, if that makes sense. Yeah. But there also needs to be a social purpose. Yeah. To like reach out to the masses and do something good and address the climate or food waste. And so that's not just a nice to have as like in the past when people go like, oh, it's kind of nice what you do, but how do you make a living? No, it's the future, because if you have two identical companies, one is impact and the one is not impact, and offering the same identical product or service, guess what's going to happen where the people will go? Yeah, and that's the future, and the money will follow these ideas and great teams to like define this new way, right? So think about the money. If it's not the idea, but if you think about how money flows from A to B, yeah, and BlackRock and all these people talk about it, the money will flow to people where there are great teams, where there are great ideas, yeah, and the money will flow away from people who do not reinvent themselves and kind of get stuck like on a high level being successful, but probably not anymore in the future. Yeah, so impact is more than just a nice idea, and I can say this because looking from my point of view, I've built 3 impact companies in the last 4 years, and 2 of them like made it to like startup awards in Germany just a few months ago. Not because of me, but it's a new trend that materializes, that gets funded. There's a lot of attraction from AAA talent to move into these companies. Guess like who's working for Deutsche Bahn these days, or Deutsche Bank, the incumbents. When I was a kid, everyone wanted to work for Mercedes and Deutsche Bank and these shiny names back in the days. Today, they're not successful to recruit anybody anymore. Yeah. So that's the new reality. So impact is much more than just like a nice to have kind of topic or a social bonfire type topic. Is when it comes to me, and you can feel I'm very passionate about it, the new form, how we should think about our existing business models, adapt them, team up, form alliances, pull in AAA talent, and to build amazing, iconic companies.
Yeah, thanks for that, Alexander. Really interesting. I'm going to ask our 3 other guests, Aglaé, Pieter, Machtelt. Do you have any questions, any comments on what Alexander shared with us?
Maybe, hi, Aglaé speaking. Maybe one question to Alexander. As an entrepreneur, what do you see as the main challenges to become for impact to become mainstream and to scale up your businesses?
Yeah, I mean that's a great question. So I guess it's very simple. It's exactly what we do here. Yeah, we team up, we exchange ideas, like we push, positive in a positive way certain topics. Yeah, so as I said before, like the key challenge I always observe is not how to build the next platform for a certain problem. Yeah, the key challenge is to address the board's executives, the decision makers of today, even in government, to help them understand how we think as entrepreneurs. Not because we're smarter, but like it's a different conditioning. We're thinking solutions. Like we run into problems, we find them interesting. I keep thinking about solutions all the time, like even at night. Yeah, so like I'm conditioned in a certain way, and to us in here, like that's privilege here because we're trained to think in solutions. Most other people in our world don't have that privilege to think in solutions when they hear problems. Yeah. So the biggest challenge is to reach out and explain, what potential impact entrepreneurship has. Yeah. How to shape a new world together, not like one by one in isolation. How can we team up like in small, powerful alliances to address certain focused topics like food waste, for example? I seriously believe it can be cracked. Yeah. So take food waste as an example. So in Germany alone, we have 18 million tons, that's 18 billion kilograms of food waste every single year in the entire supply chain, from production to transportation to wholesale to retail to consumer. Yeah. And when you just look at the professional supply chain up until the consumer, that's 60%. That gives you 10 to 12 million tons of food waste potential every single year. Yeah. So most people, to my example, most people in the industry say, wow, that's a massive problem. I say, okay, but let's allow ourselves to think about it as a market. Yeah. If you could monetize food let's say 1 kilogram of food, which does not go to waste, but which goes into production or like, goes into the NGOs, we can monetize this 1 kilo at €1 just, yeah? You can do the math. It's incredible potential. Yeah, so in Germany, the biggest player is a food bank called Tafel, and Tafel does like 265,000 tons, which is a great number. But compared to the 12 million or 18 million, that's 2% only. Yeah, so it's a blue ocean opportunity. 95+% are up for grabs, basically, because people don't look at this problem as a potential market. Yeah, so that's my answer to say, like, we need to team up to like give concrete examples what impact really means and how we can address global problems by running businesses, yeah, constructing creative business models, working in alliances, basically, run successful companies, because we all need, some money for a living. But there's tremendous potential if we allow ourselves to think in these markets or problems as businesses.
Thanks for that.
We've invested in a great company, Olio, in the UK. You might find it interesting.
Yes.
It's focusing on the household part of the food waste, which is actually a huge part of it.
Yeah.
Thanks a lot for that, Alexander. It was great to have you with us today. I think we're going to move to the second part of the conversation, but wishing you a very good end of the confinement, and a very particular period. But anyway, wishing you the best, and hope to see you very soon in Berlin or somewhere else.
Please do. Thank you.
Thanks, Alexander. I'm going to follow up with the second part of our conversation today. Machtelt, Aglaé, and Pieter, would be great to have each of you to introduce yourselves and tell us a little bit about you and what basically made you enter the space. Maybe Machtelt, if you want to start.
Sure. My background was in consulting. I started at McKinsey in Amsterdam and in Beijing. Then I moved to private equity, where I spent 10 years in mainstream private equity, focusing on the Netherlands. And after 10 years, it really started to bug me that the focus was on money making only. I really loved the way, I loved the work, but not the sole focus on money making, because I thought it was both a moral obligation as well as a missed opportunity not to look at the social impact of the companies that we invested in. So I decided to leave and to really start using the useful elements of the private equity investing model to make more impact. And after a search, trying out different things that ended up in our current fund, Social Impact Ventures. The first fund was started in 2017. It's 40 million. We've now invested in 14 amazing companies, and it's really a joy to work with our team and with the founders of the companies to make measurable impact. We focus on companies that combine a scalable business model with measurable impact and a potential for market rate return. That's a sweet spot in the market where not everybody fits in, but that's the company, type of company we look for. We are currently raising our second fund. We see a real acceleration in the impact market over the last 2-3 years. Our pipeline is very full. We see companies getting larger and stakes also, the rounds getting larger. We would like to continue to invest also in the winners. So we would like to raise our second fund.
All right. Thank you. Thank you for this. Aglaé, you want to follow up?
Hi, everyone. Happy to be there today. I'm confined in Brittany in the room of my children, so apologies for the background. So I'm working for Raise Impact, which is also an impact fund, which has been set up last year thanks to the anchor commitment of the Fondation de France, which is the largest French foundation. And the fund targets growing impact businesses, not only impact-driven companies, but also businesses that are undergoing an environmental and social transition. And so we are targeting basically impact businesses that are addressing urgent and important issues with a systemic solutions. And I actually entered the space, the world of impact investing quite a while ago, when I was 15 years ago, when I joined the French Development Agency, where I was investing in impact businesses in developing and emerging countries. And the word at that time, it was 15 years ago, the word impact was not really there, but there was this idea of being able to measure the environmental and social value created, as well as trying to align the financial performance with the achievement of social key performance indicators. And then I spent 7 years within the European Investment Bank group, working also on impact-related matters, both on the environmental side and on the social side. And I decided to move and join Raise Impact last year because I thought that I could have a stronger personal impact by working closely and more directly with impact businesses, which can play a key role in to finance the gap to achieve the sustainable development goals.
Thank you, Aglaé. Great. And we'll move towards you, Pieter.
Yeah, hello everybody. My name is Pieter Vis. I work for PYMWYMIC, which is a difficult name. It actually stands for Put Your Money Where Your Meaning Is community. We are an impact fund based in Amsterdam. My personal background, I'm an engineer from training, but moved quickly into banking, business school, a bit the same background as Alexander, but quickly moved into renewable energy. Which was in the early 2000s, something really growing and captured my interest. First as a consultant, but later as an entrepreneur, setting up a geothermal energy business for a private investor, which was really, really ambitious and really with the aim to change the world. We were overly ambitious, setting up businesses in Chile and Turkey, with the aim to become the next Shell, but then in the renewable energy business. So with that big ambition was a good motivation. When I left that company, I couldn't think of myself working for a company without a purpose. So for me, it was quite logical to find something with a bigger purpose. Luckily, I ran into PYMWYMIC, which is a movement that's existing already more than 25 years. It started as a families joining together, investing one-on-one deals, grew into a larger community. And just in the time I met the founders, they were starting to change the community into an investment vehicle and really strengthening the power of the community to invest together. So at that time, and then that is 2017, we started also our first fund, the PYMWYMIC Healthy Ecosystems Impact Fund. And we basically invest with a large group of investors behind us. So we have over 180 members who pooled their money together, also together with 2 institutional investors. And we invest in early stage scale-ups. We started with a beautiful investment in Fairphone, maybe known to you guys, about changing the electronic business.
Of course.
So like Aglaé, we said, we also look at systemic change. We really want to make a change throughout the whole value chain, and Fairphone is doing that. The last years, we really focus more on food and agtech, with the position of the Netherlands as, I think a pioneer, but also an expert in producing food in a sustainable way. I think we are well positioned in the Netherlands. So the last 5 investments we've done is all in the food and agtech space, where we also see alignment between impact and financial returns. So for us, it's a very busy times at the moment, and I mean, although we move into that later, but the coronavirus has impact. At the moment, we are well positioned and open for business for our fund.
All right, thank you a lot, Pieter. All right, so let's talk a little bit about your portfolio companies. I'd be very curious to hear, how are they performing right now during this period? How are you assisting them? And also, do you see some of them pivoting or shifting their business models to adapt to the crisis? Last week we were speaking with a company called Valuation, who went from B2B to B2C services in just 2 weeks. And they're doing very well. I was speaking with Julie Chapon, who's the founder of Yuka. I don't know if you know it. It's a very well-known French app that helps consumers choose food and hygiene products that are good for their health. She told me that to cope with the decline in premium usage, which is their main source of revenues, they had found other ways to monetize their platform, and in particular their blog. Now they're actually selling products using their blog, and they actually the conclusion of that is that the crisis has almost no impact on their revenues, which is great. So do you see examples like this in your networks of startups? Peter, maybe you want to start.
If I can start, I mean, every company is different. Most of our companies are B2B companies, with the exception of Fairphone. Of course, Fairphone, for example, as selling a mobile phone, it both has a B2C channel through their online shop. That actually goes very well. But of course, the B2B to C business is of course impacted because the shops were closed, so people are not shopping them. So of course people have to be flexible. I think we are in a lucky position that most of our investments we have done in the last 2 years, so they are pretty well capitalized. So they have already some extra cash. So in that sense, that is also lucky timing that we are well capitalized. Of course, we take into account that business plans are being delayed and sales are declined. But so it is the focus on cash management, like normal businesses. It's not different for an impact business. I do think with Fairphone, particularly, they have a strong something different to offer to compare to other mobile phones. So if you talk about the COVID crisis and people are reflecting how the new normal should look like, then definitely Fairphone has a different story to tell. So I think in that sense, Fairphone could even come stronger out of crisis. In one particular investment, a portfolio company was just fundraising, and after 6 months of negotiation, a co-investor stopped. And this was just 1 week when the crisis hit us. So we had to be very flexible, and that the current shareholders had to step in and jumped in, and we closed successfully the deal with the lead investor. So of course you need to anticipate on those kind of things. So in the crisis, you really see how important it is to work together with your co-investors and with the management team to be flexible. So I think that is what we are doing. A lot of communication, a lot of talking with everybody.
Yeah, that's right. Aglaé, do you have what's your opinion on this?
I think that it's difficult to generalize that the impact of the crisis beyond the sanitary crisis and the economic crisis will be a social crisis. So I think that there is an overall lack of visibility, but as a general matter, on the portfolio level, all the businesses are focused on the cash management. We ask all of our portfolio management companies, to do a cash stress test, to try to evaluate the impact on the crisis and to see if there will be a need for future cash injection in the short term or not. There is a focus on trying to get some credit. In France, you have the state is making some guarantees for some credits, and some of the companies are trying to get that. They are all trying also to manage the situation with partial unemployment measures. But overall, I would say that it really depending on the sectors that of the different companies. Some of the sectors are clearly more resilient because they are focused on first necessity needs. be it on the water, on the health sector, or on the environmental transitions. And it also depends on the size of the company. Clearly, smaller and earlier ventures are more vulnerable than more mature companies.
Yeah, maybe to add, also in our portfolio it varies a lot. Maybe a quarter of the companies is really having a tough time. A quarter is completely unaffected, and the middle part of 50%, it has some impact, and for them it will mostly depend on how long the crisis takes, and if the measures will continue much longer, or if they become more severe, they will be impacted as well. And we're helping the companies as well with making sometimes savings, sometimes getting some more liquidity, sometimes just hands-on helping them with stuff. And we just wanted to share one great story of one of our companies that got really good support from their customers. Sama Stores, who's employing many people in 2 African countries. One of their large customers helped them to get safe working spaces for their employees in hotels. So that's a great example. The customer pays for it, and because they want the service to continue.
Yeah, that's a great story to share. I'm staying with you, Machtelt. What about your investment activity? We just spoke about your portfolio companies, but are you investing in the same manner? Are there any parts of the investment cycle that are more impaired than others? I mean, technically speaking, how do you make a deal at a distance? That's my big question for you.
Yeah, it's an interesting question. Well, we feel that social enterprises and impact investing has an even bigger role to play in these times. If this crisis has made anything clear, it's that we need to adapt our way of living to the boundaries of our planet. So we really want to continue investing. The interesting thing is there was this questionnaire. I think it was done by I don't remember the name, but it was done by a European Council about investors. Do you continue to invest or not? And about 50% of investors said that they would expect the market to slow down, so the pace of investment to slow down, but only 15% said that they would slow down their investment activity. So there's a bit of a discrepancy there. For ourselves, what we see is that activity continues. We finalized one investment during the Corona crisis, and we're in the final stages of 2 more. Those are businesses that are relatively resistant or even can profit from the current situation. One is in food, one is in e-health. So those are sectors that, they're relatively unaffected. We've had to be a little bit creative in closing the deals.
Yeah.
One key element in our decision-making process always is a breakfast with the whole management team and our whole team, to get to know each other, and so that's just very important that not only the deal team sees the company, but also the rest of the team, and also they see us, because it's always a bit of marriage for when you do an investment, and that's much more difficult to do virtually. But we did it once, and it worked really well. What the teams did is that they put together a quiz on their team and a quiz on our team, and it was a bit fun. We had to answer questions, and half of them were serious, and the other half was just very funny, and it worked really well. This is Siri, I think, asking something.
And when we were speaking last time, you were mentioning the fact that you had to sometimes take a walk actually with entrepreneurs to have difficult conversations as well. I mean,
exactly. Not everything can be done over a screen. We've also had instances where, especially difficult conversations, difficult parts of the negotiation, you just have to do in person. So in that case, the partners just take a walk with the founders somewhere where it's quiet.
Keeping 2 meters distance.
One and a half meter walk. Yeah.
Yeah, Aglaé, do you want to share as well some details about the way you run deals at a distance?
Well, no, I mean, as Machtelt was mentioning, we are also very, very busy. We just closed 2 transactions last week, and
Great.
we are in the process of closing a 3rd one in the coming days. It's a transaction that we were proceeding for quite some months, and we decided to continue and to close them because again, the sectors that and the models that they are provide answers, long-term answers to the crisis. For instance, we closed a transaction in company providing insect proteins to feed animals, because we know that animals' food is very heavy in terms of carbon and pollutes a lot. And for instance, for these companies, the orders have grown since the crisis has started. Same, we were also looking at a company, a German company, providing a digital platform for elderly people who are isolated in nursing homes. And typically, these type of solutions see their orders increasing. And so not easy, practically speaking, to close the deal. We are running from a call to another. But we can, I mean, it shows that we can do it. For the new transaction that we are currently sourcing, we are also happy to organize some Zoom and video call and so on, but we know that we won't be able to close the deal before we haven't met in person the entrepreneurs or the management.
Yeah, that's right. I mean, I'm guessing that getting to know an entrepreneur is really key, and that's something it's hard to do on Zoom, even though you can do quizzes with like you guys at Social Impact Ventures. I think that's really a really great idea. What about you, Pieter? I think when we spoke last time, you were saying that most of the analysis process are still the same, but you had a little bit more difficulties for everything related to new deal flow coming in. Yeah, do you have any comments?
Yeah, I think we were in a lucky position that we were already in 2 transactions involved. So met the management team in person, and then actually the 2 transactions were probably not declined because of valuation. And then the crisis hit, and then you really see the effect that U.S. investors dropping out. I think that is a result we see in those 2 transactions also, that U.S. investors, they're not open, at least for European deals. I think it's more difficult for them. So actually the transactions came back to us, and also at much lower valuations. So that is a positive effect where we as an impact investor could and wanted to play a role again, and also become even more additional. I mean, impact investing for us is also being with our impact money, which is scarce money, to be additional. So where we can make a change to really put our money in companies that cannot attract maybe more standard private equity funds, then we can play a role. So actually, or I think the purpose of PYMWYMIC is even more stronger now in this time to help impactful companies. But so those were 2 companies where we already are in process with. So that runs pretty normal, like any other deal. Maybe we need to do a digital tour through a factory instead of visiting. That is something new, but we can overcome that. What I say about new deal flow, normally we are very active going out, meeting people, going to conferences, going to pitch events, and that basically stopped. So it is.
And now you need to make them come in your kitchen, right?
So it's you need to be creative there also. I mean, it is, I think, relying more about references with co-investors. We're reaching out to co-investors to see, to share deals. So at the moment we are fully occupied with those 2 transactions. But I'm curious how it goes after that. If the crisis continues, how much new deal flow will come to us. So that's something we need to see. And but yeah, I would already be happy if we close those 2 deals. To be honest, yeah.
Pieter, you touched a very interesting point. You talked about valuations. Maybe Aglaé, you wanna mention? I mean, discuss a little bit this point. But what do you? How do you see valuations being impacted by the current crisis? I mean, I heard you, Pieter, saying that they were lower. Do you think it's going to be the case for the months to come? All valuations are going to be decreased, or is it going to be just on a short-term period, or a longer term? And is it a good or a bad thing? Aglaé, maybe you want to comment on that?
No, clearly, I think that there will be an adjustment. And I think that in a sense it's healthy, because the valuation were very on the high hand before the crisis. However, I mean, it's interesting because at Phrase we have colleagues working on a mid-cap fund with leverage buyout operation, and on their hand they've clearly slowed down the processes, and they saw a clear drop in the valuation. It's already at minus 15% or 20% at the portfolio level. We also have colleagues working on a venture fund, and they are focused there on the cash management of their portfolio company. On the impact side, we're still investing, and we're investing with the same valuation or just a bit slower valuation, because on the long term, I think that impact businesses that are indeed more resilient and providing solutions to these long-term issues, I don't foresee a dramatic drop in the valuation of this type of businesses.
Machtelt, you wanna expand on that?
Yeah, I think it depends a lot on the sector. If you're talking about sectors with a large B2B element, or things like e-health that even can get a boost from the current crisis, valuations are not coming down, not yet. But for other sectors, the impact is much more severe. For example, in the sharing economy, where the models become much more difficult. So I think we don't see valuations coming down a lot yet, a little bit, and it probably gets a little bit more, but it will vary a lot by sector.
Okay.
And I think, to be honest, I think it is probably healthy that valuations will come down a little bit.
So staying with you, Machtelt, we know that investors need investors to run their funds. I'm very curious to know if whether your fundraising activities have been impacted as well by the current crisis. I heard a little bit earlier in the discussion that you were raising your second fund this summer. How is that going? Did you see some LPs, some potential investors dropping out, or are they still involved the same way they were before the crisis hits? Very curious to hear your feedback on that.
Yeah. Well, fundraising is slowing down a bit, but much less than we thought at first. We are very lucky to have our institutional investors from the first fund that are very happy and really want to continue and want to increase their investment. And also what we see is that institutional investors who were already doing something in impact investing, they don't change their activity at all. So they just continue and they want to participate. Institutional investors that are still in a process of defining what do we want to do with impact, what kind of asset classes, what kind of SDGs, and those are, for example, pension funds in a lot of cases. They need more time. Their processes just take more time. And another group, of course, is the families and entrepreneurs, high net worth individuals. We see there an increase of interest, but already for the last 2-3 years. During our first fund, what Alexander also said, we often had the discussion about can you really combine impact with profit? We really had to explain that it's not two different buckets, but you can actually combine the two different buckets in one. that is a concept that's much more accepted now. And of course, the nice thing is with people who invest their own money, they can make their own decisions. So they just continue to make investment decisions despite the corona crisis.
Okay.
So overall, it's going.
Yeah. Sorry, I cut you.
Yeah, no. Overall, it's going really well, and although some people will be a little bit delayed due to the crisis.
That's very comforting to know. Aglaé, Pieter, is it the same for you?
Yeah, maybe on our side, on our side, we are also in the process of fundraising. We are aiming to double the fund size. And on the one hand, we have the support from public institutions, which have these drastically growth. So it's great to see them supporting still the proposals. We are also discussing with private institutions like insurance, and some of them are clearly in a wait and see mode. They need to have more visibility to see which part they will allocate to private equity. But overall, I think that progressively, maybe I'm too naive, but this impact investing market is not anymore perceived as a niche market, and there is a great tendency a mainstream approach to investments through the integration of this third pillar of environmental and social related matters beyond profit and return.
Yeah. Maybe if I can add one more thing. Also earlier in the discussion, we were talking about what are obstacles to the impact investing market to grow, and one of the things we see is that it would be great to have more proof of the combination of impact and research. It's increasing the number of data points, and one of the things that helps us right now is that we have 2 good exits from our first fund, and that's only a small part of the portfolio, but at least it's two exits that show that you can actually make really good impact and really good return. So I just really hope that the rest of the market will also continue to come up with more proof.
You're actually touching on a question I was meant to ask a little bit later, but that's a great transition. Do you think that this period that we're going through right now could help prove that the impact economy, which is more resilient by nature, could be a better investment opportunity as well than traditional asset classes? Do you think at some point we're going to see that it's actually even more profitable to invest in impact than non-impact businesses? Yeah, Pieter.
Yeah, I hope so. I mean, I think I agree with Machtelt that for us it's important also to build proof points. I think for the whole sector, I mean, I think as a sector as a whole, having those proof points is important for everybody, because easily people can go back into a reflect, and if an impact company goes bankrupt and then they say, oh, looks like, yeah, it's not possible. But impact investing is not so different than other investing. Some companies will make it and some not, but impact investing, of course, has, at least for us, they are challenging the status quo. They're trying to do something new. They're trying to build business models differently, which is risky, which comes with unchallenged territory. So there's an element of risk, but that's there. But we try to indeed, diversify that also within a portfolio. And I think size of funds is important. So in the past, impact funds were pretty small, which also makes it more risky. So I hope that with increasing fund size, and we see it around us, that there are successful impact funds around us also raising more funds, which is a good sign, that also those funds are becoming more resilient. But I really do hope so that we get out of the crisis, that also impact investing becomes a more new norm, and that we can build those proof points, because they are definitely needed, and to convince more the institutional investors like pension funds. I mean, the private investors, smaller private investors or families, they know this already. A lot are aware of it, and new generation are pushing into impact. But for institutional and to make it more mainstream, we need to build those proof points.
Yeah, Aglaé, Machtelt, do you want to expand as well?
Just to add to that.
Okay, go ahead.
I'm sorry, Mario. Go.
No, you go ahead.
Okay, no, just a quick note on the fact that I think it's Bank of America or Merrill Lynch who have noted that listed companies with a higher social standards have a better performance on the stock exchange. And that's true. I mean, also in developing countries, you see that the statistics of companies with higher social and environmental standards have a stronger performance. Having said that, I mean, and it's in a sense, it makes sense. It's trying to give tangibility to the mental and the social value that exists in the company and that so far was not measured. But on the other hand, impact investing, I think that the scope is we have a longer term approach than just maximizing the profit on the short term. So yeah, that's it makes sense on the long term basis. And
now, what I really hope is that this crisis will bring more clarity on what impact investing really means. Because this term has been diluted a lot. It has been used for everything, including, ESG filters on listed companies, for example. And I see a trend in our discussions with people in the market, including LPs, that they start to see the difference between ESG investing and real impact investing in companies that are innovative and that are making measurable impact and that are potentially having systemic impact. And that comes with risk, as you say, Pieter. But I start to see that people, see that distinction more, and I hope that this crisis will increase that trend.
Yeah, I agree. I hope also, and it's indeed it's not about only reducing negative consequences, but really creating a positive impact. And I think. That makes for us also really the difference in ESG investing or impact investing. So I think the more we can show as a sector those proof points, people will move towards that direction. So, and the crisis is of course affecting everybody, but hopefully we are even more aware about the need to change our way of consumption and production. So. I hope that is something we can get out of this crisis.
And in a way we assess, looking outside the impact ecosystem, I was introducing this concept of unicorns versus camels, which is basically this idea that until now we've been looking at growth at any cost as the main KPI to assess the performance of a company. And that's the methodology, and that's all the literature you can see in the Silicon Valley. I think in Europe we have different ways of looking at companies, but still the general idea around startup is you want to build the next unicorn. Do you think that tomorrow we will be looking at a different way of measuring the performance of a company, which is to look at its ability to adapt to a crisis, survive, manage costs in a more efficient manner, find a business model that is sustainable from day one, diversify, have more complex business models like what Alexander was saying. So that's what we call a camel, being able to survive in the desert without water. So what do you have to say about that? What do you think? And do you think that it's in a way an opportunity as well for the impact ecosystem to be more mainstream as well? Because that's the concept of resilience is really in the DNA of the impact ecosystem. Machtelt, maybe if you want to react.
Yeah, I think in Europe we are much more used to building camels than unicorns anyway, because there's less money around. So social entrepreneurs have to be more resourceful and prove their models with less funding and on a smaller scale. And also, once you have a working product or service, scaling is less fast and easy because you have all these boundaries in Europe and all these borders, and all the systems work slightly different across the border. So I guess in that way we have an advantage because we've been used to doing that anyway. both the entrepreneurs and the investing community, I think.
Yes, yeah, I agree. And also I think impact, that it shows you that to overcome crises and business plans are maybe postponed or delayed. I mean, you need more time. So I think the longer time horizon of funds, and which we call it impact, also the more patient, is, I think, more relevant also, that to not flip a company within 3 or 4 years. That's to cope with these kind of crises, you need to also have a bit of a longer time horizon to overcome, and to pivot businesses.
Yeah, no, and I also think that this crisis reveals that you need to change the models, and that with a focus on human capital, first necessity needs, on shorter value chains, focus on health, integration of the biodiversity. I mean, it may sound obvious, but on the other hand, clearly there will be a tendency also to go back quickly to the old model to preserve some jobs, because there will be also a social crisis coming in. And I think that the opportunity is, one, indeed, to see these new models coming in and evolving, but also to transform the old model into a new sustainable model. And that's a bit the thesis of the Raise Impact Fund, is to help transitioning the companies, to help them integrating environmental and social matter throughout the value chains.
Okay, thanks a lot for that. There's a question that we got from the audience that I'm going to read to you, from Arnaud Lekunf. How do you think the market will react to support profitable company in the impact landscape? Is there a risk to be too much profitable for these companies, for this startup?
To be too profitable?
Yeah.
That's never a bad thing, I think.
It's very healthy. I do think there is, if you want to elaborate further, there's probably, there are limits to what you can do, in a sense that if you are pricing unfairly, or if you're a monopolist, or if you're, I don't know, serving very vulnerable people and asking very high prices, for example, what we had in the microfinance world for a while, I guess that can backfire on your business, if you're especially if you're an impact company, but also if you're not an impact company. But generally, yeah, please.
Yeah, the challenge with, I think, if a company is a small startup with a really strong mission and a strong mission-driven management, and of course, when a company is becoming successful and growing, and you need to hire and double your teams, it can be hard to keep that culture. So it's all about building that same those same values in a company. So and of course, that's the challenge of a growing company, that it stays that mission aligned company. So what we do is really as into the governance of where we play a role as investors to make sure that we embed that impact into the governance of a company. So into the articles of a company, to make sure that in policies, in recruitment, gender diversity, those kind of things, you really need to work with the company and try to also give it a place on the discussion table. So that is really the I think we as impact investors can play that role to keep the company also on the right track there.
Yeah. Yeah, maybe to add to that, the companies that we invest in also generally have their business model completely aligned with their impact. So if the business does well, the impact scales up. So there are generally no difficult trade-offs between how well the business is doing and how well the impact is doing. And then if you combine that with really good measurement of the impact, so very strong reporting systems on what is the impact that you're making, and actually reporting on that every month. I think you're basically best practice.
Mm.
But I think some friction is also good, in that sense that doubling your sales and increasing sales is good, and if your business is aligned with impact, that's also good for the impact. But on the other hand, to have discussions on how you grow, I mean, an example of Fairphone is, of course, we want to increase sales. But on the other hand, it's not about selling as much phones as you can. It is also about thinking about recycling, what to do with e-waste, and making sure people can take their phone as long in their hands. So that is a friction, which is I think a good friction that the company has. That's not about pushing a lot of phones out. It is also thinking of how people can keep their phone as long in their hands. So there's always some natural, I think, friction, which is good.
Yeah, thanks for this discussion. I see the time passing by, so I have one last question for you. Do you see any particular risks for the ecosystem? Like, do you see a risk that leaders, funds of funds, institutional players will move away from sustainability focused economy to rescue the current distressed sectors? We've seen a lot of movement in France and in other European countries. What do you see? Do you see a risk that sustainability could go at the bottom of the pile and be put to a later agenda? Yeah, Aglaé, maybe if you want to start.
Yeah, I think that there is a risk, but just to preserve jobs, I think, and to preserve the current economy. On the other hand, I think it would be a short-term answer, and that and I really hope that this crisis again reveals that we need to change and transform these economies. So and I think that the state might play an increasing role in this current crisis, and it will be important to have leaders and role model, not only on the state level, but also on the private level, at the company level, and I think that there is overall a stronger awareness among citizens who are all confined today in their homes, and realize that you don't need to buy all the that you are buying for, and that with first necessity needs you can be very happy, and that and if it comes from all these parts, things may change, hopefully.
Any other comments from you, Pieter or Machtelt?
Yeah, one risk that I see is that if the sort of the decline in asset values continue, and uncertainty in the market, that investors, LPs, but also GPs may become more risk averse. And the companies that we're talking about, the social enterprises overall, are relatively young, even though the market is developing really fast. But they're in general relatively young companies, and also the funds are relatively young. The market is young, so we are with a second fund already an experienced party in the market, but that relative to normal buyout or PC funds, that's still extremely young. So there I see a risk that if investors become much more risk averse, that will slow down investments in the sector. That's a risk that I see. But overall, I do think that because of the current crisis, people really see that investing in SDGs is not something nice, but it's really necessary. So overall, I think it's good for impact companies.
And just if I may, just to add to what Machtelt said, it's true that the risk is that people don't see climate change as an urgency matters right now, while the crisis reveals the contrary. So it's important to keep this long-term view.
That's a great point. That's a great point. That's great. I think we've said a lot. We've shared a lot today. Is there any conclusion that any of you would like to share? Any few thoughts that you would like to share with the audience before we conclude this session?
Just maybe to keep a positive note, and then I let you, Machtelt, just what you said before, Kevin, that we saw new business models evolving in an environment of a crisis. So let's keep this also positive mindset to try to find the proper business models that will answer the current crisis.
Yeah, maybe to add on that positive note, that I think there's a trend to really see that innovative business models that can really change a system, that investing in those is something else than ESG investing. And I think that distinction and the willingness to invest in companies that can really make a difference, that is increasing, and I think that's a good effect.
Yeah, and also, I'm also hopeful that in the midst of the crisis, we have investors, coming to us with really wanting, doubling their stakes and wanting to invest in impact, because they really feel they can make a change, even a bigger change now. So that's hopeful. So I do think, this is a chance for the impact field to show that that returns and impact can go hand in hand. So I'm looking forward.
That's great. I think that was a great conversation, and I retained a lot of positive notes from you guys. I think there's a lot of hope and an opportunity for the ecosystem to actually use this crisis as a way to push even more its methodology, its values as well, to people that are actually not too aware of what is an impact-driven economy. And yes, there are some risks that are there, like always, but I'm pretty sure that in the end, it's a great opportunity to accelerate the growth of sustainability-driven companies and to grow in the future. So that was really great to have you all with us today, and thank you again for taking the time and sharing your wisdom with us. I'd like to just point out that for next week we'll have a great session on refugees with the UN Refugee Agency. So please be with us again next week. It will be on Tuesday afternoon. And I think the technical team is telling me that I'm way over the time, so the limit. So I'm going to end here. Thank you again, Pieter, Machtelt, Aglaé. Have a lovely time in Amsterdam and in Brittany, and I hope to see you guys very soon, personally or at a distance. Thank you again.
Okay. Thank you very much, Kevin.
Bye.
Bye.
Bye. Bye.